Hi, everybody, and welcome back to EBNet Stream. Today, I'm joined by one of the stalwarts of our industry, Geoff Baars, who's the chairman and CEO of NMG Benefits. Not only that, is one of the original founding members. And I thought I'd catch up with him over a cup of coffee to discuss his experiences in our industry. So welcome to EBNet Stream, Geoff.
Thank you so much. Thank you, Natalie.
So you're one of the founding fathers of NMG. And I wonder if you maybe want to share a bit of that story that we were chatting about earlier.
Sure. So I emigrated from South Africa in 1989 as a young actuary. If you like, the push factor at that point was I'd qualified as an actuary a couple of years earlier. And this gentleman called General Magnus Milan sent me some train tickets to appear in Palabora in July with the 7th South African Infantry Battalion. And my career was really just starting to take off. And I thought that probably wasn't the best move. So I moved. I was working for Swiss Re in South Africa, and I relocated to Swiss Re in Zurich. And I was there for a couple of years, but really missed the drive. I think you'll be familiar with the famous saying by the founder of Capitec, which is, in Switzerland, everything works, but there's no opportunity. And in South Africa, nothing works, but there's lots of opportunity. Which is a little bit extreme, but it's kind of hard to argue with that. So it was very boring, frankly, from a work perspective. The lifestyle's magnificent, but I was earning more than somebody in their 20s should be earning, and it was just, but I was very understimulated. And I came back in November 1990 to present a paper to the actuarial convention. It was in Cape Town, and so Mark Pritchard and I had worked on this paper together. And when I came back into this environment and around the people, I suddenly found myself tremendously stimulated, and I was like my old self and raring to go. And we sat down, 4 of us who were fundamentally just really good friends, and we said, hey, why don't we go and set up a business in Singapore? And was like, yeah, okay, great, let's do it. Now, I was the oldest at that point I'm still the oldest of the 4 of us, but I was the oldest at 25.
Wow.
Now, I don't know what, I look at that, my youngest daughter turns 27 this year. And I struggle to give her the keys to the car, right? So I don't know what, I think my parents all our parents have something to answer for, to allow these 4 youngsters. So 18 months later, there we were. We pitched up in Singapore, and we started, it was called NMG Risk Managers and Actuaries. We thought that was a very clever name. And we started in Singapore, and basically, it's 18 months later in 1992.
And the NMG, where does that come from?
So Singapore being Singapore, everybody there loves the 3-letter acronyms, or as they call them, TLAs. And so we decided our company name also had to be a TLA. And so there was a Nick, 2 Marks, and a Geoff. And we decided the Marks had to share had to share the one initial, so NMG it was.
Mark in the middle.
Mark in the middle. There you go. Very well. Good one.
So over the years, I mean, you've obviously been with the business as one of the founding partners for the entirety of its existence. And over the years, what kind of are the memorable evolutionary points in this business that kind of stand out for you?
Well, there's several. The first thing I'd say relevant to South Africa is the fact that if you're bearing in mind, when we actually started the business, the words South and Africa never appeared in our business plan or marketing plan.
Wow.
It was still apartheid times. The passports weren't that welcome, and we were trying to set up a business in Asia, which we did. Then things changed very rapidly in the early 90s in South Africa, as we all remember. And November 94, we actually started NMG Risk Managers and Actuaries (Africa). which is now what's NMG Benefits these days. So November 94, we've just had our 30th birthday in South Africa. And so that was obviously a very important development for us. And what basically has happened over time is that the international business, the non-African business, has become very focused as a consulting business for the financial industry. So it's effectively a strategy consulting business focusing on insurance, reinsurance, asset management, and wealth management. Or another way of calling it non-banking financial services. So, and that's the business that Mark Pritchard now runs. He's the CEO of that, based in Sydney. It's a very successful business, considerably larger than the NMG Benefits business, and operates in Australia, Singapore, obviously, where we started, Malaysia, the UK, Canada, US, and a few other places. So it's a very much a global business focused on the financial industry worldwide. And it's got a fabulous business model. Basically, the consulting is, if you like, the top end, but it all takes place off the foundation of data. And we have insights and analytics programs that we run, and that give us basically unique insight into the data of these markets. And we don't go cold on consulting assignments. We've always, we start day one knowing more about the industry and most often the client itself than they do. And that's a very big advantage that we have over the competition, and a very difficult advantage for them to overcome. So the international consulting business is a fabulous business. And I'll say that's developed over time, and now covers really all the major financial markets in the world. We might not have a presence everywhere, so for example, Japan, China, etc., but we do operate in those markets and carry out studies and do consulting engagements there as well. The NMG Benefits business started out very narrowly focused on healthcare. And it was initially health actuarial, and then Adrian and Barry started this business called Momentum Health with their discovery product, and we were early adopters of that for our client base in South Africa, and we saw the opportunities there. So we were very strong proponents of the discovery health product in the early 90s. And we were also doing a lot of post-retirement medical aid work, a very actuarial kind of thing, but it didn't exist yet. There were no accounting standards requiring it, and we were sitting down with some large corporates in South Africa and explaining to them that they had a very large liability in terms of the promises they'd made to retirees to continue funding medical scheme contributions, and they had nothing, they'd made no provision for that on their balance sheet and so on. So before it became an accounting standard, we were already doing the legwork and helping clients with that. And we've just really evolved over time. In the 97, we acquired a pension fund consulting business called Pennant Consulting, and that formed the foundation of our retirement funds business. So we, a few years after that, we started doing retirement fund administration. That eventually, became quite substantial. And where we are today, we cover the whole gamut of employee benefits in the broadest possible sense, and that includes investment consulting, obviously retirement fund consulting, administration, healthcare consulting, financial planning, and so on. So we cover the whole real range of that.
And your view of the industry going forward, where do you see the evolution of this industry? Where do you see it going?
Well, obviously the employee benefits industry in South Africa is not growing and hasn't grown for a long time. We don't see people coming and saying, what I really want to do is set up a standalone pension fund. No, that doesn't happen. In fact, it's even what we're finding is that people who are not already in the retirement fund industry in the form of either an umbrella fund or a standalone fund don't really want to enter it. And you can understand that it's a somewhat historically inflexible, complicated industry. And so even SMEs who have no retirement savings built in with their employees are not really attracted to it. It's if at best a grudge purchase. So I think there's definitely work for us to do as an industry to be more attractive, unless of course government's going to do what they did in Australia, which is mandate retirement savings. But until that happy date, we've got to go and make our propositions more attractive. So yes, well, the industry isn't growing, partly because the economy is not growing, and partly because it's an industry that is not known for innovation. As a business, the only way we can grow, therefore, is there's only two things to do. One is to take business from your competition in the sense that it's assuming a zero-sum game. And the second is to kind of grow the parts new, if you like, new markets. So we work very hard on both of those. And in order to achieve either of those, you need to innovate and you need to be different. You need to differentiate from your competition. So we have certainly the last 2-3 years spent an inordinate amount of time and energy and effort and money in innovations, in different solutions. So on the healthcare side, we're very heavily focused on lower income employees in the formal sector who are often neglected. And that's been certainly our fastest growth area. As you know, the medical aid industry is static. The 9 million members of principal members and dependents of medical schemes, that's been static for a long time, and it's hard to see that that's going to grow substantially unless something dramatic happens, low cost benefit options or whatever. And however, the primary care and the medical insurance side of the market for lower income employees, that is growing very strongly, and we've been certainly at the forefront of that and are pushing for that. On the retirement side, the best news ever, the only thing that would improve the whole retirement fund industry is mandating retirement savings, as they've done in Australia. And we all wait for that day, because I think until that happens, we'll always have a patchy coverage, right? And some people but before that, what the two-pot system is a brilliant piece of legislation. In fact, I'm a bit skeptical of government and regulators. I think the impact of two-pot is way more profound than anybody ever anticipated, the people who drafted the legislation. I think it's magnificent. Yes, it's caused all of us, we forget, which is why humans have strange memories, which is why women have more than one child. But we all went through a very painful delivery process, August, September, October last year. The whole industry did, no question. But it's really resulted in a much greater degree of member engagement, and we've gotten much closer to our members. We've understood what their issues are. They, many retirement fund members now know who their administrator is, which they didn't before. There are places I can't go wearing this jacket because I'm going to be mobbed by, oh, you're my administrator, where's my two-pot claim? I'm like, okay. Yeah. But we, as I said, we do operate internationally in all the big retirement fund markets around the world. And, I'm personally a member of Australian Super, which has over 2 million members in Australia. And I've met all the senior people there, and the big funds in Australia. In the UK, the same thing. They'll tell you the number one challenge in the retirement fund industry globally is the lack of member engagement. And it's such a struggle for those funds to engage with members, to get them to be making additional contributions, to even be thinking about their retirement savings, to be making sensible member investment choice decisions. And they really, really struggle to get people engaged with this. And two-pot, we don't have that problem anymore. Not anymore. We our Braamfontein head office, which is my favorite office in NMG world. We've got offices in some beautiful cities, Natalie, but my favorite office in NMG world is Braamfontein. We're on the 9th floor. On a clear day, we can see our colleagues in NMG Botswana. It's a great office. We were inundated. We were having 200 walk-ins a day in September and October walk-ins, I mean members pitching up because they want to get their two-pot savings claim. And I was, it was wonderful. My colleagues just rolled up their sleeves. Everybody, it was all hands on deck. We had our head of compliance sitting down in the lobby with members, guiding them through. It was a fabulous experience. Like most of the administrators, we threw a lot of resources at it. And when the dust settled a bit, I said, guys, round 2 is coming on the 1st of March, and we can't have the same issues again. So we built some beautiful tech, Natalie. You can some really nice, what I call the pot bot. All my people go, oh my God, you can't call it that. But nobody came up with a better name. And we built a fabulous WhatsApp tool that basically guides you through the process. It leverages off our financial literacy tool. But you can inquire about, what's in your vested, non-vested pot, what's in your savings pot. You can initiate the claim. You can actually, the entire process can be handled entirely on WhatsApp without you having to talk to a human being or phone a company or log on to a website. And it's really magnificent. I encourage you. I'll send you a link and you can have a go at it. We were so proud of this tool. What happened in September? The sheer volumes is we discovered that there's 3 essential things in our administration business. There's the pot bot, there's the portal where people can log in and submit a claim another way, and then there's business as usual in our administration business, which has to process contributions and pay claims. Well, with the volumes, we couldn't do all 3 at once. So my tech people are probably horrified, I'm telling you this, but we had to switch off the one so the other 2 could flow. We were like constantly, okay, the pot bot's open for 2 hours now, and then we close it. So I said, come March, guys, we can't do this again. Can't throw the resources at it. And the members will not be as forgiving second time round, and rightly so. I think everybody, all the administrators, they had their own issues and things, so nobody was taking competitive advantage out of anyone else's problems. But March, now I can tell you very happily that more than 95% of our claims are all going through the pot bot. So we're seeing far fewer numbers of the walk-ins because it's actually the tech's working fine. We ironed out all the the systems challenges and so on. But the reality is, we now know them to all our members, and they're expecting a level of engagement. They're expecting us to talk to them, to guide them on things, and I think that's fantastic.
I think as you were speaking, the one thing that came to mind was the words financial inclusion. And you've kind of touched on auto enrollment, this kind of member apathy, how we've managed as an industry, or I suppose how regulation forced us to kind of start interacting with members at a different level and certainly more frequently. What do you see in the overseas markets? How are they dealing with I don't think they have the same extent of financial inclusion problems that we do, but how do you see them dealing with this member apathy? Because 50% of members have claimed from their pot, but the other 50 are still kind of in the wind.
Well, look, claiming from your pot is a bad idea unless you have to. There's, from the tax perspective, from the compound interest perspective. So, our pot bot has a little calculator. We try and nudge people not to. Just from if you don't absolutely need this money, or if you've got a better source of money, then don't do it, because have a look at your calculator and see what the impact and in terms of your ultimate retirement savings. But just as an aside, when I was in Perth for most of August last year, and it was dominating the time at NMG, and my daughters, who are both adults there and earning income in Australia and are part of this mandatory savings, what they call the superannuation guarantee. And they said, please explain this 2-pot. And I told them, well, this is how it works. And, 1/3 goes into the savings pot, and your savings pot, they said, that's wonderful. Why don't we have that in Australia? I said, well, it's a bad idea. You marginal tax. And they said, no, but can you imagine? I could access some of my retirement savings every year. And I went, well, okay, I get it. And actually, this is the thing, retirement savings is it's mandated in Australia. It's a very, very sound system in Australia, but And in the UK, there, as you pointed out, you've got auto enrollment. It's a quasi mandate. Most people end up, if you're not, defaulting out and so on. US and Canada is different, but there's no magic bullet to. And I actually happen to think that the member engagement's terrible worldwide. That's my point. And it's better in South Africa now because of this. So we've got the inclusion aspect of lower income workers. They're only included elsewhere if they're forced into the system. And philosophically, you can take a view as to whether that's a good or bad idea. I think in Australia, they would never have been able to mandate retirement savings unless it had been driven by labor and the union movements, which is how it came about. If it had been, a right of centre government trying to do this paternalistically because it's in your interests, it would never have worked. So I think, inclusion comes when people are doing that. I think what's happened in this industry, and we're really pushing this, is much more flexibility. So you're going to hear about a product called NMG My Choice. And I'm not going to tell you about it today, but it's basically is designed to reflect the realities of the South African market and the fact that many lower income people are not part of these formal structures. They might be in a provident fund, but then they're very seldom contributing optimally, or very seldom engaged, or very seldom investing wisely, and so on. And most often not part of health protection either. So we've come up with a structure that's going to make it much easier and much more flexible for employers and employees to participate in the system. It's one of our innovations we're very proud of.
It's actually a question I wanted to ask you around innovation. Where do you think the next competitive advantage is in this industry?
Well, I think flexibility is key. So a friend of mine runs a business. It's an SME. It's got a few hundred employees. He was selling stuff to me. I was selling stuff to him. The usual thing, he was telling me it's a great business. And then I said, by the way, what do you do on employee benefits? He says, yes, I've kept meaning to do that. I said, look, the first thing we'll do is we'll take you onto our umbrella fund. We think we've got one of the best umbrella funds in the country, open architecture. It's not vertical integration like you get with the big ugly guys, where you have to be in their insurance and their assets and so on. We've got that's our advantage, right? We've got to play that one. Pure independence. He says, great, okay, I want my staff on your umbrella fund. Going through this process, he's like, good grief. What are all these papers? What is all this stuff? Every one of the underlying portfolios, you've got all the term sheets and all that kind of stuff. And all these decisions I have to make about contribution rates and all these rules and these rule amendments that have to take place. And I've got to deal with this board of trustees, and I've got to set up this Manco and all these. What is this? Why are you guys so inflexible? And my employees have to decide on contribution rates of. This is terrible. Why is it like this? And I said, well, look, I think we're more flexible than the average in the industry, but that's just how this industry works. And he said, why? I said, well, why can I not can my employees, a lot of them are on variable income, contribute this month, but not for 3 months, and then contribute another and put in a lump sum, and now I've had a great month and put in 5,000 here. And why does that not work? And I said, there's no legal reason. If your fund rules allow that, you can do that. But frankly, all the administrators, it's very difficult to deal with from an administrative perspective. And that's the thing we've cracked. So is actually to be able to integrate with payroll so that it can be fully flexible, so that any given employee can contribute something or nothing, and then something else, and then something more, and the employer might be contributing at a more at a more consistent level. But all of that requires really good systems and integration with payroll. So I think if you can achieve that side of it, flexibility, allow employees, because let's face it, Natalie, employee benefits historically was very paternalistic. The employer decided, okay, the world's changed. South Africa's changed along with the world. Most people are on cost to company, either pure cost to company or cost to company plus a little subsidy here or there, right? So in that context, it's not appropriate for the employer to be making all the big decisions on where the employee's money is going. That's just no longer, and you can see regulation heading that way as well. So it's in the democratization of employee benefits is the key issue here. Now, as soon as that happens, it's going to be your priorities as an employee. It's not for me to tell you that the whatever 5,000 rand a month, whatever it is you're spending on employee benefits, how you should be spending that. I shouldn't be telling you that, right? I should be facilitating that, but you should be deciding, is that going to be for group insurance? Is that, do you want funeral cover? Do you want medical scheme? Do you want a primary care policy? Do you want to put it into retirement savings? How do you want to? And that's really how it should be going. Employers should be and will be facilitating this process. They'll be selecting so that they'll be checking that whoever's coming to take your money is not going to run away with it. But they should not be saying Natalie's retirement fund contributions will be X and going into fund Y. But that does require an inordinate amount of flexibility on the part of the service providers, which is our big innovation. So there you have it.
So we've spent a lot of today talking about the industry and where it's going, etc. Let's take 1 or 2 minutes to wrap up and talk about Geoff. Geoff, tell us one thing that most people wouldn't know about you.
Well, I probably wouldn't know my age unless they did some arithmetic.
You did say when you matriculated, so yeah. Too late.
Well, they might know that I would love riding my bicycle. So because I just do road biking, mountain biking. That's how you look this good at this age, Natalie. You spend a lot of time on a bicycle. I'm off to Malawi for 10 days to go and ride my mountain bike there. It's going to be wonderful.
Lovely.
You can't see because I've got this. I do play the saxophone, not very well. But I do love African jazz. There's some amazing saxophonists in this country.
Definitely.
McCoy Umrabata is my favorite. So perhaps the African jazz isn't that well known. But I think for the most part, what I've said to my exco at NMG Benefits is, guys, look, I'm not going to be around here forever. I'm really focusing on stuff now. I've got a magnificent team in place. And I've assured them that I will indeed retire one day when one of two things happens. Somebody on Exco can beat me on a bike, or the average energy levels of Exco is greater than mine. And then at which point I'll say, okay, I'll hand over.
So I'll issue a throwdown.
Oh dear.
Like an Ironman athlete would say to a mountain biker, one day your mommy will let you do the rest of the race.
Well, the response is, nobody should ever have to ride a bike where they're wearing those outfits. But
a mammal. Geoff, it's been an absolute pleasure getting to know you this morning. Thank you so much for taking the time. And I'm sure we'll be chatting to you again soon.
I hope so. Thank you, Natalie.
Keep well.
You too. Bye-bye.